This is the greatest financial experiment in human history. Most people do not even realize they are living inside it. Everywhere around us, global debt has exploded to levels no society has ever carried before. Public debt, private debt, household loans, corporate borrowing, all have grown like a storm that never seems to end. Today, governments borrow trillions of dollars as casually as if it were pocket change. Central banks create new money with a few keystrokes. Families sign up for 30-year mortgages, the way earlier generations bought simple household goods. We speak about debt as if it were normal and harmless. The truth is very different and far more unsettling. Debt has never been just about economics. It has always been a tool of power and control. History shows this clearly, and that is exactly what I try to explain on my channel Finance Historian Official. The real question is not whether this mountain of debt will cause a crisis. The question is when the crisis arrives and who will be forced to pay the price when the system finally resets. To understand that, we must travel back through time and look at the roots of debt itself. Debt is as old as civilization. In Mesopotamia, the first clay tablets were not stories or prayers. They were ledgers, hard records of who owed grain, cattle, or silver to someone else. Early societies treated debt as something sacred. Priests and kings supervised loans, enforced repayment, and sometimes forgave debts in great jubilees to prevent social collapse. Those rulers understood a simple fact. Debt was useful, but too much debt was dangerous. They knew you could not trap an entire population in obligations forever. At some point the chain breaks and the system cracks. Centuries later, during the Renaissance, debt took a new form. Banking families like the Medici in Florence transformed simple obligations into organized credit backed by gold. Kings, popes, and merchants borrowed huge sums to build empires, fight wars, and raise magnificent cities. Yet even then, debt carried risk. Spain, flooded with silver from the New World, declared bankruptcy again and again in the 1500s because ambition raced ahead of real income. That is one of the first big lessons of financial history. Even powerful empires full of treasure can drown when borrowing grows faster than reality. By the 20th century, the danger became global. After the First World War, many nations were crushed under debts they could never repay. Germany faced reparations so heavy that economists warned the country would be destabilized. They were right. Hyperinflation in the early 1920s turned money into worthless paper. Ordinary Germans carried piles of banknotes just to buy bread. Debt had become the fuel of political chaos, and the scars of that period helped shape the road to the Second World War. In 1944, the modern world tried to engineer stability at the Bretton Woods Conference. The United States held most of the world's gold, so the dollar became the anchor currency. Other nations pegged their money to the dollar, trusting America would remain disciplined. For some years it worked. But temptation returned. By the 1960s, the cost of the Vietnam War and domestic spending pushed the U.S. to print more dollars than it had gold. Foreign governments demanded real metal instead of paper promises. In 1971, President Nixon ended the link to gold. From that day, debt was no longer finite. It was limited only by trust. That decision changed everything. Central banks discovered they could steer economies by lowering interest rates and encouraging more borrowing. When growth slowed, they used debt to stimulate demand. When crises hit, they created even more leverage to rescue banks and markets. The 1980s saw huge expansions of public debt in America and Britain. Developing countries borrowed heavily from Western banks and then collapsed into the Latin American debt crisis. The pattern was set: chase prosperity with debt, then suffer when the tide recedes. The 2008 financial crisis proved how fragile this system had become. It was not only about housing. It was about debt stacked on top of debt. Mortgages were bundled into securities, insured with derivatives, and multiplied by extreme leverage. When one corner crumbled, the whole structure shook. Banks were saved with trillions, while ordinary citizens faced unemployment, foreclosures, and austerity. History once again revealed that debt was not neutral. It protected the powerful first. Since 2008, the numbers have moved from alarming to surreal. Global debt crossed $300 trillion by 2023 and kept rising in 2024. Compared to the size of the world economy, this is unheard of. Some nations like Japan carry public debt above 200% of GDP. The United States adds trillions every year with little debate. Emerging economies borrow in foreign currencies and expose themselves to sudden collapse when global rates rise. Stability now rests on an idea that debt can grow forever without consequence. But history teaches that debt always has consequences. It distorts behavior and creates bubbles. It shifts wealth from the future to the present. Every dollar borrowed today is a claim on tomorrow's work. When the claims become too large, repayment turns impossible. That is why earlier centuries were filled with defaults, restructurings, and inflations. No empire escaped that truth, and no modern system will either. Today, debt has become invisible. When governments run deficits, they do not ask citizens for cash. They issue bonds and quietly build a tab in the public name. When you swipe a credit card, you are borrowing, not paying. Corporations use cheap loans to buy back stocks and boost earnings. Leverage feels light on the way up and crushing on the way down. The entire financial world floats on promises that may not be kept. Look at the United States, still the anchor of the global order. Its national debt passed $34 trillion in 2024. Translate that into reality and each taxpayer carries hundreds of thousands in obligations. Interest payments rival defense budgets. The world's largest superpower now borrows money simply to pay interest on old borrowing. Across Europe, countries like Italy and Greece remain above 100% debt to GDP. In China, local government debt and shadow liabilities may be far larger than official figures show. Everywhere, debt has spread like a silent disease. The trap is also psychological. Politicians love debt because it buys time. Raising taxes engages voters. Cutting spending engages even more. Borrowing seems painless, so future generations will deal with it. The illusion works until interest rates rise and the burden becomes visible. Since 2022, central banks raised rates to fight inflation, and suddenly households faced higher mortgage payments. Corporations saw refinancing costs jump. Governments discovered their budgets were tighter than they admitted. Even now, debt is sold as a road to prosperity. Students take huge loans for degrees that may not pay off. Families stretch to buy homes believing prices only rise. Nations are told deficits do not matter because central banks can print unlimited currency. This is the great lie of modern finance, and on Finance Historian Official, I keep reminding viewers that history screams the opposite. When debt grows beyond reason, there are only a few escape doors. Inflation is the quiet favorite. Prices rise, savings lose power, and government debt shrinks in real value. It becomes a hidden tax paid by ordinary people. The second door is restructuring, admitting the debt cannot be paid and forcing lenders to take losses. Greece during the Euro crisis is one example. The third door is outright default. Argentina, Russia, and many others walked that painful road. None of these choices is harmless. All are forms of breaking a promise. The signs around us point toward inflation as the preferred path. Debt-laden governments need the erosion of real value. That means ordinary citizens will carry the cost. Wages, savings, and purchasing power will slowly drain to preserve the system. People fall for it because the numbers are abstract and the pain creeps gradually. Debt is about power more than money. Who lends and who borrows decides who suffers when the structure breaks. The present system is designed so that when debt becomes unbearable, the powerful rarely pay first. Banks are bailed out. Corporations restructure. Politicians retire comfortably. Ordinary people lose homes and hope. Understanding this is not only education. It is survival, and that is the voice of my channel Finance Historian Official. If we strip away illusions and study the long road of financial history, we see that reckoning is unavoidable. Timelines vary, but destinations remain the same. Debt builds, leaders deny, crises erupt, and societies reset. I want the viewer to feel that they are part of this cycle right now, where we will explore how citizens can protect themselves and what a real reset might look like. Until then, remember this simple sentence that fits the spirit of Finance Historian Official. Debt is never free. Someone always pays. History has already written that bill, and we are only waiting for the collector to arrive. If this gave you a fresh understanding, subscribe to Finance Historian Official and travel with me through time to read the answers hidden in history. Debt always demands payment. Finance Historian Official, we need to talk about what happens when the bill grows too large for the world to handle. Systems do not collapse with announcements. They reset quietly, then suddenly. That is how financial history has always moved. The current order is no different. Even if politicians and central banks pretend they have invented a magic machine. Think about everyday life. Your salary rises slowly, but prices move faster. You feel the squeeze and cannot name the cause. That causes debt-driven inflation. Governments spend borrowed money, and new currency chases the same goods. Central banks try to cool the fire, but they also fear a market crash. So they walk a narrow road, talk tough and act soft. On Finance Historian Official, I want viewers to see this contradiction clearly. When a reset comes, it usually starts in one corner. It might be real estate, government bonds, or a major bank. Confidence is the first domino. Once trust weakens, lenders ask for higher interest. Higher interest makes old debt unbearable, then households suffer first. Mortgage payments jump, credit card costs rise. Small businesses close. People call it bad luck, but it is the mathematics of debt. Look at 2024 and 2025 signals. Interest payments in many countries have become the fastest growing government expense. That means less money for health, education, and infrastructure. Austerity returns wearing new clothes. Citizens pay twice, first through inflation, second through spending cuts. History repeats and the names on Finance Historian Official change, but the pattern stays identical. So who really pays when nations inflate debt away? Savers pay. Workers pay. Young people pay the most. A child born today inherits debts they never approved. This is taxation without confession. Earlier generations at least debated taxes openly. Modern finance hides the tax inside prices. That is why on Finance Historian Official, my mission is to make the invisible visible. Resets also reshape politics. When people suffer, they search for enemies. Populist leaders rise promising easy answers. The 1930s proved this dangerously. Economic pain fueled radical movements. The same risk grows today across the globe. Debt is not only financial TNT, it is political dynamite as well. Let us talk about restructuring, the second escape door. When Greece renegotiated its obligations, bondholders accepted losses. That protected citizens slightly, but unemployment still exploded. Restructuring means admitting failure, and powerful lenders resist it. Banks prefer inflation because it protects their paper assets. On Finance Historian Official, I want viewers to understand why lenders fight this door fiercely. Default is the third door and the most dramatic. When Argentina or Russia stopped payments, markets collapsed overnight. Currency crashed. Imports disappeared. Ordinary life turned chaotic. Leaders say major nations will never default. History laughs at that arrogance. Even Spain in the 1500s defaulted. Power delays default, but cannot cancel it. The modern world believes technology has killed these dangers. Central banks run complex models and speak confident language. Yet models cannot erase human nature. Politicians still chase votes with borrowed gifts. Corporations still boost earnings with loans. Families still confuse credit with wealth. On Finance Historian Official, I want to keep the tone grounded and honest. So what should citizens actually do? First, respect cash. Living with an income is not old-fashioned, it is freedom. Credit cards train us to borrow for comfort. Break that training. Earlier generations saved first and spent later. That habit protected them during cycles. On Finance Historian Official, I connect these habits to long historical lessons. Second, choose assets wisely. Real wealth is not only paper currency. Skills, education without excessive loans, businesses built patiently, and investments spread across cycles are shields. Real estate can help, but only when bought with discipline. Markets do not always rise. Finance Historian Official viewers must remember this moderation. Third, understand interest rates like weather. Low rates feel like spring and invite planting. High rates feel like winter and punish weak structures. Watch refinancing dates on your loans. Prepare before the predator awakens. Knowledge is cheaper than rescue, and that sentence fits the spirit of Finance Historian Official. Corporate debt also hides risk for workers. Companies borrow to expand, then fire employees when costs rise. Do not trust job security built on leverage. Build personal side income if possible. This is not panic advice. It is cycle awareness shared on Finance Historian Official. Governments could reduce danger by taxing honestly and spending carefully, but honesty loses elections. So leaders deny until crisis forces action. Finance historian official viewers should not expect politicians to save them first. The system is built to rescue lenders and markets before citizens. Resets eventually create winners and losers. Those who understand cycles become winners. Those who live blind become losers. Inflation rewards borrowers early and punishes them later. Default punishes everyone except the prepared. Restructuring spreads pain more fairly but is politically hard. On Finance Historian Official, I present history so you can stand on the winning side. There is also a moral side to debt. Ancient jubilees prove that societies need forgiveness. Modern finance has forgotten forgiveness and worships growth only. That worship has created $300 trillion mountains. Empires earlier collapsed for smaller numbers. Arrogance is the loudest alarm today. Look at household psychology. Advertisements sell lifestyles on monthly installments. People calculate affordability through payments, not prices. This keeps leverage alive. Break this lens. Ask not what is the monthly payment. Ask what is the real price across 30 years. Finance Historian Official viewers must adopt this clear question. Education debt deserves special warning. Student loans in many countries trap youth before careers begin. Choose degrees with realistic income paths. Do not borrow tens of thousands for uncertain futures. Debt should serve opportunity, not dreams only. That is grounded advice I share on Finance Historian Official. National debt also influences global power. The dollar system forces many countries to hold U.S. bonds. That exports American inflation to the world. When trust in the dollar weakens, geopolitics shakes. The 1971 decision still echoes in 2025. Anchors rust when oceans rise. Some people ask whether central banks can print debt away forever. The answer from history is no. Printing solves liquidity, not solvency. It buys time and creates bigger bubbles. Each rescue since 2008 required more leverage. That means the next rescue will demand even larger numbers. Mathematics does not lie even if leaders do. So prepare mentally for a world where debt resets. Do not fear the word crisis. Fear blindness. Save part of income regularly. Reduce high-interest borrowing. Spread investments. Build skills that pay in real markets. These are boring sentences but powerful truths, and Finance Historian Official stands on boring truth rather than exciting lies. Resets also remind us that growth has limits. Forests cannot touch the sky. Debt cannot expand beyond human trust. When trust breaks, systems rewrite contracts violently. That rewrite will shape the 2030s just as earlier rewrites shaped the 1930s. Finance Historian Official viewers should watch these long mirrors. The system trains us to treat debt as permanent wallpaper. History shows debt is temporary scaffolding. Scaffolding must be removed or it crushes the building. Modern leaders keep adding floors without removing poles. That is why danger looms in 2025 and beyond. If you take only one lesson from Finance Historian Official, take this. Freedom begins when spending obeys income. Power begins when knowledge obeys history. Do not live on credit stories sold by banks. Live on cash reality written by you. The story of global debt will continue to unfold regardless of denial. Major nations will choose inflation first, restructuring second, and default last. Citizens will be invited to pay through prices and cuts. But Finance Historian Official viewers now know the script of that invitation. History has the answers, and that is why this channel exists. From a practical perspective, subscribe to Finance Historian Official. Travel with me through past centuries to understand the next reset before it arrives. Debt will speak loudly soon. Make sure you already understand its language.